Hi there, everyone. This is Sadie again. Right now, we will talk about the next part of our course is understanding S&P 500 futures. Now, of course, we don't trade these futures, so you can go ahead and do whatever you want to do in your accounts. But my strategy or our strategy is to trade the options on these futures um, because we cater for smaller accounts, $3,000 to $5,000, and these big futures contracts are catered for mostly bigger accounts. These are big contracts, and I'll show you why and what I mean by big contracts. But yeah, let's move on here. We'll talk about it, and then we'll move on to the platform, and I'll show you how it works. So, what is S&P 500? What are these S&P 500 futures? Obviously, they track the S&P 500 index. The underlying on these futures is the S&P 500 index, which is obviously the S&P 500 index. A broad capital market cap weighted index that tracks the 500 of the largest companies in the US. And I don't think these are 500 companies in there. I think there are less than 500. And now I'm not entirely sure about the exact number, but I think it's about 490 something. So people say 500 because that's what the number says, but there aren't exactly 500 companies in there. But anyway, that's not the part of the our course here. So all futures are contracts, they're not securities. Now securities, if you want to look up what securities are stocks. You can look up on the SEC website and figure out what actual securities are. Securities are basically where you are buying a piece of the company, and that's what we call a security. With these contracts, you're not buying the company. You're not having any, you know, underlying ownership of the company, unless you are assigned the stock when you're trading equity options. But that's a different story. So why are they so capital efficient? Because they give you leverage. Now we will talk about leverage later. Um, and index futures, S&P 500, Nasdaq, Russell 2000, and Dow, the four major indices in the U.S., are all cash settled. When I say cash settled, I mean whenever the underlying contract settles on these, they settle in cash. There is no underlying, like for example, commodities, oil. Oil market sells in 1,000 barrels of oil if you want to take delivery. These ones just settle in cash. If you are positive in these contracts, they'll give you cash. If you're negative, they'll take cash from your account. Simple as. So how does it work? The S&P futures is E-mini S&P 500. These are regulated futures listed by CME, the Chicago Mercantile Exchange, the biggest futures exchange out there. The ticker is /ES. The multiplier of these futures is $50. So what does that mean? Let's just talk about $50 first. So for that $50 affects your current ES notional, current notional. Now let me just get my marker out here as well. So this notional amount here, this number is affected by the $50 multiplier. Now, all other future contracts or future asset, different future asset classes have different multipliers on them. But this one, the S&P 500 index, has a $50 multiplier, meaning what you do in order to get the total notional size of the contract, you take the current price of the contract. So when I was putting this slide together, the price was 43.78. And multiply that by 50, and you get this number, $218,000. So this one futures contract controls $218,000 worth of notional. That's what it says. Now, in order to trade this, if you just want to buy an outright future, you have to put down at least 7 to 9% off this $218,000. So if you want to calculate that number, it comes up to 14,000, about 15,000. Now, when you're putting down $15,000 for something that is worth $280,000, right? That comes up to a leverage of 14.8 or 15. That's what leverage number is. And I do apologize for the formatting here on the slide. I think I should have taken a closer look at it, but I'll fix this. So yeah, just divide this number by that, and that's a leverage of 14.8, or about 15x. And that's what we mean by when they say futures are leveraged products. The way they are leveraged is because they're only asking you to put down $15,000 in order to trade this future versus when the contract notional is actually $218,000, right? So this is what you call initial margin, and then there's a maintenance margin, which we don't want to get into because we're not trading futures. We're trading options. So, and by the way, every tick size is actually 12.5 per index points. $12.5 per index points in this future. And trading hours, 3 p.m. to 2 p.m. Pacific with the daily maintenance, the 1 hour maintenance time for all the futures markets. So Chicago Mercantile Exchange, all the futures contracts on it, they have a maintenance period of 1 hour every single day, which is 2 p.m. to 3 p.m. Pacific. If you want to convert this into Eastern, this is basically Sunday 12 p.m. Yes, so sorry, 6 p.m. Eastern. It starts on Sunday 6 p.m. Eastern, right? And then they finish at 2 p.m. Pacific Friday. So they do finish at 5 p.m. Eastern on Fridays, and that's all it is. This is the contract, ES contract. If you want to know anything else about this contract, I have only put enough information here for you to get your head around this product, especially. What's the notional size? What's the initial margin? What's the leverage? If you want to know anything else, just let me know. Next slide. A little bit more about these. Quarterly contracts available, March, June, September. These for 8 consecutive quarters and 3 additional December contract months. Monthly contracts listed for 6 consecutive months plus 4 quarterly contracts. Okay, underlying is the ES, we know that. Additionally, there are weekly contracts as well. Now, this is mostly about futures options now, not talking about futures. I'm talking about futures options. You don't need to worry about how many contract sizes are there, how many contracts are there, months, and whatever. I'll teach you everything. Like, where is our focus? We don't even focus on weeklies. We don't even focus on monthlies even. We focus on 45 to 50-day contracts. Future options can expire on any given day of the week. Yes, they do, actually. This should not be part of this. So let me take you through here. So I'm here back in the platform. Actually, I should have told you how to identify the month here. I'll put that in. So you see these the letters for each month for the futures contracts. If I open this up, yeah, here on the top part. So Z is the December month. It says here December. So when we were talking about futures in the other slide, there were quarterly contracts. So December, March, June, September, December contract, always available. Now here's the main thing. Look at the open and high and the volume and volume sizes in these contracts. Now, again, I need a marker here, and this is very important. So this number is very important here. Actually, I should have circled the whole column. So here, look at this. No volume in anything beyond March 2024. All the volume is always in the front month. You call this a front month. This front month is still I'm talking about December 2023. It is still 50 days away. There is no time decay in these products. In futures, there is no time decay. So you will see this volume at this level up until the last moment, about 3 to 4 days before expiration, when people move all their contracts, and this is what you call rolling. You roll your contract from this month, the front month, into the back month, which is March. This marker is too thick. So you will roll your contract from December into March. That's what you call rolling. This is a roll. If you want to go anywhere beyond March 2024, there is no volume. There's no market there. Is there open interest? There might be. I can probably bring in open interest here as well, but we can see open interest when we click through these futures contracts. There was one more thing here that I learned about the futures thing on the platform is they give you the notional sizes. Thing on the Analyze tab. Sorry, I'm just going to spend a few seconds here just so I can give you a little bit more info on. I saw a tool where they give you the notional sizes of each futures contract. It's here somewhere. I saw it and I've forgotten about it. Futures trader. Maybe this is the one. Maybe this is the screen. Maybe not. Wait, active trader. Maybe active trader is the one. No, it's not. Scan. I think it was in the scanner. All the stocks. We don't need to waste too much time on this. I will give you some. I will give you some info here where you can see the notional of each futures product. That's weird. I thought I had it. Okay. So we are here on the ES future side. Sorry to to waste a few seconds there. Let's say we are trying to buy this contract again. I'm going to hit the ask, right? You're going to look at the chart. Let's look at the chart. Again, it works exact stock. So here, it needs to go up, and then it needs to come down. If you're short, it needs to come down. If it's long, it needs to go up. It works exactly. There are no Greeks. If you look at it, there's only delta because each futures contract is $50 multiplier. So it comes with 50 deltas, right? That's why you see a delta of 50 here. There are no other Greeks because futures are like stocks. It's just that these are leveraged products. Um, and that's it. That's what a future is. If you want to trade it, look here. So when I did this, but if you want to trade and see how it looks, okay, I think we are talking about the trading part later. So I'm going to keep that for that video.